Institutional Investment Banking with Kotak Mahindra Bank. Mr. Manian, good morning. Thank you for joining us. You know, last time when we met, it appeared that it could be end of the bad news, but looks like there is going to be much more grind. I mean, the economic data is indicating that economy is weak and the credit demand is now in single digit. Single digit credit demand for large banks means that there is just no motion in the economy.
Yeah.
No, your just summarizes an endorsement that you agree with me that it's bad and it's going to remain bad for a couple of weeks.
Yeah. Sorry, I couldn't hear you earlier, but yeah, you are right. I think the data is quite clear. The last published data is quite clear that there is lack of credit growth in single digit, as you said. And if you just analyze it a bit more, you can also see that large part of that growth in the retail side is retail side is driving the credit growth far more than the industrial and the services side. And if you take the corporate growth as well, it is driven largely by services, and a sub part of services is banks lending into NBFCs. So if you take away those, the core industrial credit growth seems to be really weak. Actually, it will be close to 0 or 2 to 3%, not more than that. So that's a fact. And the way I look at it is for a while now, the investment-led credit was already low. There weren't too many term loans, funding projects happening for a while now. And off late, I think the working capital loans are also kind of not growing, partly because we've seen significantly lower utilization of working capital by our clients. So basically, either in these times the firms are tightening their working capital and therefore making it more efficient and therefore drawing less from banks, or because their own growth is not too much and therefore their need for further working capital from banks is lower. So overall, I would say that both the investment-led side as well as the working capital-led side just now looks relatively weak.
Whenever the economy revives, where do you think the revival will come from? Which investment arm of the economy will show signs of turning around? Look, consumption may go up or down, auto sales will be bad for 6 months, then the base effect would kick in. But that's not how economy works. For economy to work, you need large sectors to fire. Like in the last decade, power, cement, steel, metals, everything fired together. Where do you think that kind of growth will come back?
No, so it's all a vicious cycle. It's not that the consumption demand itself does not also leads to investment over a period of time, right? If consumption goes up, capacity utilizations go up, and therefore further investment happens. So all this is correlated. They are not independent pockets in that sense. I would say that I think some part of the consumption is led by confidence. So for example, while you may say auto is a large sector both from employment and from GDP point of view, and it has a lot of trickle down effect right down to SMEs. So construction is again a sector which has a lot of trickle down effect in terms of employment and in smaller services and smaller suppliers. So therefore, some of these sectors have to be revived. I think the efforts are being made. I think the recent announcement on making finance available to last mile for construction projects is a good step. Some other measures on getting the financial sector like the NBFCs, some support for them is a good measure. So I think it's a combination of various things that will lead to it. I think there is no one silver bullet which will solve this. I think it is a combination of multiple things. I think government is trying multiple things over a period of time. And the drop in interest rate over a period of time, I think, will bring back investment. If the interest rates drop as fast as they are dropping, I think at some point in time, investment will pick up. and it has to go beyond government investment and into private sector investment. But I do believe that lower interest rate at some point will trigger the investment cycle.
Prolonged, do you see that that pickup though then, Mr. Manian? Because corporates for the moment can't really justify capex until demand picks up. Meanwhile, GDP forecasts have been lowered as well on the back of the fact that we continue to see corporates lag behind. So, you know, in your assessment, how long is this lag effect going to last?
In my mind, this is a 12 to 18 month period. I think it will take 12 to 18 months to get some. It's not going to be a sharp recovery. I think it's going to be a measured recovery, and it will take 12 to 18 months to recover.
FY20 is washed out. FY21 will be a struggle, and stock markets are pricing in I don't know what, because stock prices are at an all-time high, banking stocks are at an all-time high, and the underlying economy is bad. So I'm just trying to understand what is going on.
No, I think the stock markets, the way I look at it is this whole period has created a polarized kind of a situation where there is flight to quality, and there are a few stocks which are priceless in some ways, and there are others which have no takers at all. So I think you have to dive deeper to know that the stock market is being driven by fewer stocks than the reality. The broad market is not as good as the index looks. So, and it is usually the case, right? When things look that good, they are not actually as good as they look. So, the reverse is also true. So, I think the broader market is not as good as the Sensex may want to make you believe. That's because there is flight to quality, and a few stocks are just getting disproportionately priced for the quality or the belief in them.
Now we've only discussed the bad news, Mr. Manian. Only bad news. Where is light at the end of the tunnel? What is the good news in this market? If at all, where do you think the surprise will come from? You know, it's early in the morning. Let's discuss good news also. Give us something which will make our viewers slightly more optimistic.
Yes. Yeah, like I said earlier, that some of these measures, if the construction industry picks up, I think it will have its impact. Low interest rates is good news. So some of these are good news, and these are going to finally drive demand and growth. So it's not that everything is bleak, right? Like I said, low interest rate will drive investment. Some of the government measures on tax, all the things that have been done recently, I think finally low tax does drive investment, right, in the medium term. It may not happen today because some of these, just remember that investment also has lead time to happen. I mean, you decide today, it will take you 12 to 18 months or even 2 to 3 years to put up that capacity. So some of these do take their time, but I think the fact that low tax, low interest rates will drive investments, I don't have any doubt about.
All right, Mr. Manian, we'll leave it there. Thanks so much for joining us.